What is Fundi Finance? Fundi Finance is a cross-chain, decentralized autonomous organization, in short, a DAO. Governance is given to DAO token holders, and DAO token holders vote via a decentralized blockchain signature. DAO token holders receive a digital financial reward in return for voting on protocol proposals. The more DAO tokens an investor holds, the more voting power is allocated, and the greater the financial reward becomes. The Fundi Finance DAO governs a digital finance ecosystem that bridges decentralized and centralized finance via a secure digital platform. The Fundy Platform is a Web3 decentralized DApp that integrates investors with blockchain and Fundy services. Innovatively, the Fundy Platform acts as a digital solution to physical or real-world assets. Once on the Fundy DApp, users will be able to benefit from several services, one of which is the tokenization of real estate assets. Investors or businesses will use the Fundi Finance platform to optimize their total wealth portfolios and tokenize real estate and land assets to a digital token. Once a digital asset and on the blockchain, physical assets will see a new era of possibilities in finance. Real estate, for example, is well known for being an illiquid asset, only liquid at the point of purchase or sale, and often resulting in loss of ownership. Not anymore. Fundi Finance gives physical assets infinite scalability, additional layers of security, a liquid, transferable asset that operates 24 hours a day, 7 days a week. Once tokenized, assets can be invested as liquidity to receive passive income or made into fractional ownership shares for a business venture. Fundi Finance platform has it all covered, from asset-backed loans to a real estate launchpad and accelerator. So whether you are looking to invest in digital assets and compound your LP or tokenize grandma's house you just inherited, Fundi Finance is the platform for you. What is a DAO? A DAO is an organization represented by rules encoded as a transparent computer program, controlled by the organization members, and not influenced by a central government. As the rules are embedded into the code, no managers are needed, thus removing any bureaucracy or hierarchy hurdles. A DAO gives investors greater control over their finance. To this effect, a DAO can also provide a single entity with total control of their financial destiny. Another benefit of a DAO is its low operational cost. To achieve a protocol roadmap, a DAO does not need large corporate offices or human resources. Governance is given to token holders via a voting system. Diversity is often rich in DAO projects also, as every token holder has voting power. There are no borders, just one investing community working to achieve a final goal. With a DAO, governance is not centralized. There is not one single entity in control or 20 fat cat shareholders speaking for all investors. A DAO is quite the contrary. This is backed up in reality by a vote and a computer code that is programmed in finance for the greater collective, not just a few elite. To sum a DAO up, in short, it is a financial system that gives investors greater control in the protocol they choose to invest their money in. It's taking back the power of your finance and choosing a path to greater financial freedom. How does Fundi Dao work? The Fundi Finance DAO operates as a decentralized, democratic voting system via a Web3 DApp connected to a blockchain. To connect to the Fundi DApp, an investor must sign permission via a Web3 wallet. Once connected, a user has to interact with the decentralized app to make their proposal and verify it on the blockchain. Any entity can propose a governance motion. No DAO tokens are currently needed to do this. All proposals must have a time duration of more than 48 hours. A user must set the proposal to start in a future time and complete the required data. An investor must own some DAO tokens to vote on an active proposal. Each DAO token represents one vote, and the maximum voting power for an individual is 1,000 votes. For a motion to win, it must have a majority of over 55%. When a motion is voted, work to uphold it begins immediately. The vision for the Fundi DAO is that ownership of the protocol is given to the DAO token holders. All protocol operations are proposed and voted for as a decentralized governing collective of individuals that build and evolve a computer code designed to manage an ecosystem. Fundi believes in a DAO ecosystem where investors control their finance entirely. With Fundi Finance, investors will become their point of central financial control, with a voice and voting power into how the overall system they chose to use works and operates. Sounds pretty standard for DAO so far, right? This is where I tell you what is different about the Fundi Dao, and listen up because things get very different indeed. Firstly, the Fundi Dao system will have not one but two DAO tokens. I know, you're thinking crazy, right? Well, it's actually pretty darn clever, and so far, Fundy is the first to take this novel approach. In the process, they might have also solved one of the DAO most controversial problems: securities regulations. As some may know, DAO projects have received some heat from the SEC in the past, with the SEC stating that most DAO structures and actions have areas that could be seen as a security action, thus making them a security token. Amazingly, Fundi Finance Protocol solves this problem. The Fundy team has split governance of the project right down the middle with a tokenomics-designed ecosystem for 2 DAO tokens, one of which is a security token that is yet to be released. With 2 DAO tokens, the Fundy protocol creates an individual distinction between the gray areas of a DAO that are often seen as controversial to securities law. By separating the governing aspects between the projects and centralized and decentralized finance mechanics, Fundi Finance has designed a DAO system that tailors to many investors' needs while complying with securities regulations. I know what you are thinking, so what's the difference between the 2 DAO tokens, right? Well, let us dive right into this now. The Fundi Token has a ticker FF and is the DAO that governs the Fundy decentralized finance services. Holders of the Fundi Token can enjoy the benefits of total decentralization within the Fundi protocol. Using or purchasing the FF token does not require KYC, and investors can utilize all Fundy DeFi products on the platform anonymously. FF holders can propose and vote on the governance of all DeFi products within the Fundy protocol, such as new LP pairs, fee and reward smart contracts. The reward system for FF is also isolated from receiving income from any area in the Fundy ecosystem that can be deemed a security. FF's reward income is solely accumulated from fees acquired via smart contracts for investors using DeFi products based on non-securities digital tokens only. Holders will receive this reward for supplying the FF token as stake liquidity with a multiplier on reward income for those that vote. Overall, Fundi Finance has spent a lot of time protecting the project from running afoul of any future regulatory problems and achieved from what I see an excellent legal framework that can only improve all future DAO tokens. Suppose I was to sum up FF's fundamental pros and cons to FFST. Then it would be that for the bonus of an investor keeping their anonymity and trading in decentralized finance, they become somewhat restricted in the options of governing power and reward income Fundi Finance can legally give to them. Of course, ultimately, you can hold both tokens. Still, Fundi Finance has respected that some investors, especially in the digital asset world, would like to remain with the power of anonymity. At the end of the day, in Fundy's case, it is just clever marketing and allows them to push services to a greater audience. So that is how Fundi Finance will use the FF DAO token. What about FFST? Firstly, I like the idea of FFST. It is all the things a real DAO should offer and more. Best of all, it actually abides by regulation, which, unfortunately, is not the case for many DAO tokens out there. So, with the Fundy roadmap program to release FFST as a security token sometime in the second half of 2022, what can an investor expect on the list of perks to holding this securities token? To start to purchase, hold or trade the FFST token, Fundy will have to follow KYC compliance regulations. A reputable third-party provider will do KYC verification, and the Fundi Finance platform does to store personal data. Once an investor has been verified via KYC, Fundi has promised a multitude of optimized finance, combining modern DeFi mechanics with traditional finance. Holding the token will pay a passive income similar to that of FF. However, this time rewards are paid as legal dividends and collected from a smart contract fee system that only operates within centralized finance areas. What does this mean? It means that, basically, Fundi Finance can pay dividends to FFST holders for fees taken from real estate tokenization, sales, loans or venture income, and other financial transactions that could be securities related such as stocks or shares. What is even more remarkable is that FFST holders will participate in digital and traditional finance evolution by tokenizing physical assets such as a home, a holiday house, gold, silver, and even an entire real estate development. Fundi is business-friendly and state services for real businesses are available, with not only attractive lending fees for collateral-backed loans, but a platform to tokenize real estate projects from the beginning at the funding and planning level. Fundi boasts of a launchpad and accelerator that crypto has never seen before, one for real business and real-world assets. Knowing the team has been involved in construction projects of up to $30 million in the past, it's no surprise there is talk of real estate ventures with fractional ownership shares in the roadmap for 2022. FFST holders will also benefit from a greater scope to governance powers. A no-hold-bars effect where FFST is more like a legal share and every holder is critical and part of the mechanics. Being a securities token, FFST also gives greater transparency, security, and regulation to investors. These areas of Fundi Finance will be regulated and abide by regulatory measures of securities and not that of cryptocurrencies. So if I was to sum up the pros and the cons of FFST to FF, then in short it would be that for losing some decentralization and being KYC, an investor opens the door to a new level of digital and traditional finance, an exciting era where real-world assets come to crypto and crypto goes to real-world assets. Businesses get to benefit from DeFi-related products, suited to other asset classes, while entrepreneur-minded individuals can even raise funds for a real estate project. Most exciting is these industries have huge market caps and Fundi only needs to tap into just a few % of that to match the entire crypto market cap today. Overall, it seems that FFST is the first of a new era in DAO tokenomics, a hybrid securities token, a DAO more compliant with regulation and gives benefits of tokenization to real-world assets. Well, thank you everyone for watching Fundi Finance YouTube video on the Fundy Dao system. We hope you enjoyed it. Please remember to hit the thumbs up button and press that subscribe. Set a reminder and you won't miss out on our next video about Fundi tokenomics. Remember to check out Fundi Telegram channel and other social media pages. Links can be found in the description, on our channel info, and on the Fundi website.